All right. There he is. He got a new background. All right, it's 12 o'clock. Can everybody see my screen? Yeah?
Yes.
Why don't I see a
Yes.
little green thing? Thank you. Why don't I see the little green thing? Yep, that's what I want to share. Okay. All right. Well, let's get started. Make sure I mute phones and such. Happy Thursday or Friday Junior, as Jessica called it this morning in our today will forever be called Friday Junior. I love it. That's funny, right, Claudia? I mean, it just makes you feel better. I'll let her give you guys the whole genesis of that name when she comes on just shortly. But today's topic is Show Me the Money, how to review settlement statements and closing costs. So happy to see everybody on this Friday Eve or Friday Junior. For those who I have not had an opportunity to meet, and this is my first time meeting you, hello. My name is Ray Cole Jackson. I'm a South Florida real estate and finance attorney. Just to give you a little bit of background about myself, we haven't met before. I am a Florida girl from Miami originally, specifically. I attended the University of Florida, so go Gators. Went out to California and got my law degree from Santa Clara University School of Law. I have my LLM in real property development from the University of Miami, and I am a proud licensed Florida real estate sales professional. Professionally, I am a founder and CEO of a couple of real estate related service companies, including Model Mortgage Experts, which is our mortgage brokerage, Title Experts, which is our title company, and Transaction Experts, which is our transaction coordination group. Give me 1 second so I can see what's going on here. Hey, Paris. Hey, Katya. Good to see you. Feel like I haven't seen you in a while. Or is it just me? Today's training is powered by Title Experts. Obviously, we're discussing closing costs. So who else will be powering that discussion? If you guys have not had an opportunity to work with Title Experts before, we welcome you to experience a Title Experts closing. Some of the features and benefits of working with Title Experts include we are an attorney managed firm. You probably already know, if not, you'll learn today that every title company is not an attorney. They can't provide legal advice. So that's one of the benefits of working with Title Experts, including we provide a dedicated closing team. Transaction coordination services are available through our partners at Transaction Experts, regular status updates, and of course, realtor trainings. Our contact information is there on the screen. We do service all of Florida. Our main office is located in West Palm. We have satellite offices throughout Florida. But I always get that question, like, do you service Tampa? Do you service the Keys? Do you service Tallahassee? We service all of Florida. So make no mistake, wherever you go under contract, and hopefully you go under contract while we're on the call, right? We're definitely available to work with you. Now, outside of that, and probably more importantly, we also power, by virtue of our real estate related service companies, we power Experts University. Experts University, many of you probably come to into this training today by way of Experts University or by the association. But Experts University is our online coaching and training community. For those of you who are not already a member, you are welcome to join. You would join us by visiting www.expertsuniversity.com. No / just go there and you'll be able to join us. Now, I'll tell you, Experts University was founded specifically for the reason that we know that when you learn more, you earn more. And there's just no other way to put it. One thing I always mention to the group when we come on these calls, when you increase your competence, that increases your confidence. And of course, that in turn increases your compensation, right? So all of that I just said is capsulated into learn more to earn more. Now, at this moment, I want to introduce to you guys and give her a chance to introduce herself. Miss Jessica, the inventor of the Friday Junior phrase, just to say hello.
Hi, everyone. My name is Jessica Nowak. I am the Community Success Coach for Experts University. I am as well a local alum from Florida Atlantic University. I got my MBA at Florida International University. I am a Florida licensed broker and a Florida real estate agent in Florida, Georgia, and South Carolina. So any questions you guys may have in regards to Experts University, feel free to reach out to me, and I look forward to meeting you guys.
Yay. So Jay, you could drop
Nice to
your
meet you.
Jay, you could drop your contact information in the chat. Thank you so much. Yeah, you guys make sure you do not hesitate to reach out to Jessica. She's like, they can call me because we know realtors don't answer their phones. So I'm just saying, just make sure if you have any questions at all. The community is growing tremendously. We're very excited about that. And I'll tell you guys, I mean, we have a whole catalog of classes, but I don't know what you don't know. So if there's a class that you need or some support or resources in some area, just reach out to Jessica, and we will definitely make sure to get that on the calendar. So how to review settlement statements and closing costs. How to review settlement statements and closing costs is our discussion for the day. So we do have a class specifically about the closing process, right? An overview of the closing process, bringing you behind the table to see how we get you from contract to close on the title agent side. And that includes, you know, what you see on the screen. We go over the whole deposit, escrow title searches, how to clear title, balancing, scheduling, and then conducting and closing and funding. Today's conversation is specifically centered around this piece of the discussion, right? Looking specifically at the figures, how we come up with those figures to give you an understanding, a framework to understand how the settlement statement is prepared, because invariably, number one, it's going to go out to you. You should know how those closing costs are calculated and how they've been added to the settlement statement. And your clients are very much likely probably to ask you a question about it. So today's discussion is to give you a framework around understanding how to navigate the settlement statement, knowing where the costs that you'll see on the settlement statement, where they come from. And then obviously, if you have questions, if something seems to be unclear, you'll know how to ask those questions because you have working knowledge now of the settlement statement. All right. So the first concept we want to start off with is understanding these settlement statements. We know that generally there are two forms of the settlement statement that are utilized at closing. One form is the closing disclosure. The closing disclosure is utilized with finance transactions. So if the buyer is purchasing the property using lender financing, specifically mostly public financing, we'll talk about if they're using hard money, it's a little different. But if they're using traditional financing, the closing agent is going to prepare, in addition to the Alta settlement statement, what's called a closing disclosure, or what you probably hear called a CD, right? And the closing disclosure has the same information as the Alta settlement statement. The difference is the closing disclosure is a federally regulated form. Every time I say that, I stumble over it. A federally regulated form, which has requirements surrounding where each line item is placed on the closing disclosure, as well as how much those amounts can or cannot change from the time that they are initially disclosed to the borrower to when they close, right? So this form is federally regulated, and it is part of the whole TRID framework, right? And so this, what you see on the screen, is an example of a closing disclosure, okay? Now, the other commonly used form of settlement statement is what we call an ALTA. Some of you may call it a HUD. It is not a HUD. One, because that's a completely different document, but this is called an ALTA settlement statement. This form is not federally regulated. Now the fees are going to be the same, especially when the fees are the same when they're paired with a CD. because the figures are dropped into our settlement software and then they just populate on the different forms. But what I want you to understand is if this was a cash transaction, not using a lender that is subject to TRID, the fees could change. They could change drastically sometimes. But as a general matter, for the purposes of today's discussion, what you should really just understand is that this document should mirror, especially in a finance transaction, the figures should mirror what you see on the CD. The reason why most people like this, the Alta settlement statement, is because of because of how it the layout, right? So the way this is set up is you see the line items down the middle, and then you see the seller side on one side, the buyer side on the other side, and you're able to just volley back and forth. Whatever is a debit to the seller, for example, should be a credit to the buyer. Whatever is a debit to the buyer should be a credit to the seller. So you get a chance to see if they affect both sides. So you get a chance to see these costs, and if they affect both sides, you see how, versus the CD, which is not terrible. It's just a cleaner. Go back to it. Just looks nicer, right? To see the line item down the middle, and then you see the seller side on the left, the buyer side on the right, and showing you whether or not it's a debit. Debit means it's a charge to the party, versus a credit mean it's a credit to the party. That's monies that are being added to them in the transaction, right? So those are the two forms of the settlement statement. Now, as we walk through the remainder of the session together, we're going to use the Alta just because, again, it's clean and it's an easy way to look at it. Now, one of the first monies that are going to be registered to the escrow account with the closing agent is the escrow deposit, right? So the escrow deposit, just throwing in a little bit of fundamentals around the closing process, know that the escrow deposit can be made by personal check, cashier's check, or bank wire. That initial escrow deposit can be made by personal check, cashier's check, or bank wire. Notice you do not see cash there. No closing agent should be accepting cash. And really specifically because very often if it's a finance transaction, the lender they will ask you to see a copy of the voided check. Obviously they want a wire confirmation. They want to see proof of the deposit. And so we're not accepting cash, right? And so that's the very first line item you're going to see on your settlement statement. So you see there we have the deposit. In this hypothetical, the buyer's escrow deposit was $4,000. So you see the $4,000 there as their deposit. Okay. Now, after they've made their deposit, you guys saw in the 30,000 foot overview is when we do our intake and we start ordering title searches, right? So the remainder of the figures that you're going to see on the settlement statement are going to be related to the title search and the title searches and what is identified from those searches, obviously the lender charges, and then of course any contractual costs from the that are identified in your purchase and sale contract. So let's look at the items from the title search and what figures we pull from the title search, the title searches. So the first is the title commitment. Now, what is the title commitment? The title commitment is the search that reviews the property's history of documents recorded in the public records. So when we do a title search, we do a search of the property, we call it a title search, and the results of that title search produce what we call a title commitment. Now, the cost of the title search ranges from $95 to $200. It just depends on the closing agent, right? So that's going to be a cost that you're going to see on the settlement statement, and it'll just say title search. This is an example of a title search, and this is the B1 requirements of a title search. Now, the reason I'm showing you guys that this page of the title search is because from this title search, we pull some figures. If you see what I've circled here, we have paragraph 6. It says a record of satisfaction of mortgage from Sandra P. Ayala to Mortgage Electronic Registration Systems. And it gives us the recording information. That's a payoff. That requirement number 6 is asking for us to pay off a mortgage, right? So what you see in Schedule B1 of the title commitment, we call that requirements. And so this document is saying these are the things that you must do in order to issue title insurance at closing. So just to be clear, our responsibility as a title agent is to protect title and escrow. You hear those two terms before. So you hear title and escrow. Obviously, title is issuing the title insurance policy, and escrow is making sure we manage the money. When we issue an insurance policy, this is our commitment. This is what we go by from our property insurance, our title insurance vendors to say, here's what's required to issue this buyer title insurance on the property at closing title experts, right? And so we go through those requirements and we check them off. And again, starting at requirement number 6 is where we have money requirements, right? Number 7 is also a money requirement. It says record release of summary memorandum of agreement and addendum to financing agreement recording. It gives us the recording information. That's a PACE loan. That's telling us that there's a PACE loan that needs to be paid off in order to release the PACE loan lien that is recorded against the property. And for that, we'll order the payoff from what we call Y-Green. The 8th requirement, it says there's a notice of commencement. That means someone who's done work on the property, it needs to be either they have not been paid or they have been paid, but they have not released their lien against the property. So that could potentially be some more money that we're adding to the settlement statement, okay? So let's see what that looks like. So here's the payoff in the payoff section. So there's the mortgage payoff. And then we have the ability to even break out, instead of making it just one figure alone, we're showing what the principal amount of the loan was, what the interest charges were, the insurance charges, any escrow. So we line item, however that payoff statement came to us, we add those line items there on the settlement statement so the seller can see how we came up with that amount. Okay,
Can we ask questions?
sure.
Back to title insurance for 1 minute.
Uh-huh.
Who is the insurer on title insurance? Is that a title company or is it a third party?
That's a third party. Very good question. So let me go back here and see if that information is on this one. So you would have seen on the first page who's the insurer on this policy. That's a very good question. So Title Experts is not issuing the insurance. We're a broker for title insurance, right? And so our insurers are Chicago, Westcor, Fidelity, Old Republic. You guys probably seen those names. WFG. There's a ton of them, ton of insurance companies. That's a First American. Who else? So many. But that's a very good question, Chuck.
Thank you.
Yes, very, very, very good question. We are insurance brokers and we're brokering title insurance. Very good question. All right. So again, what you see here highlighted on the screen is that payoff, the mortgage payoff and the Y-Green payoff. Now, in this particular case, the contractor was paid, obviously, so we don't see a payoff for him. The contractor was paid. So the only thing that we're going to have to do with that particular requirement is make sure that we would have the contractor's notice of termination affidavit of payment recorded when we close. Okay, so that's where we get the payoffs that you see on the settlement statement. The next form of search is the lien search, right? So we've done a title search. Here's our lien search. The lien search will report matters of record with the municipality, such as tax balances, water bills, permits, and unrecorded code violations, right? The cost for the lien search is set by the municipality, and this is also a pass-through. So whereas, Boca may charge $200 for their lien search, Delray, Riviera Beach, Miami Gardens, Coral Springs, they could charge a different amount for their lien search. But whatever they charge, that amount is added to the settlement statement. And again, that's a pass-through. So you guys are seeing a pattern here. So we had the cost for the title search or title commitment, and then those costs that were identified in the title search. Now we have the lien search. So we have the cost for the lien search, and then we're going to have the costs that are the amounts to be paid that are identified in the lien search. So this is an example of a lien search. I like this form of lien search because you can quickly see where you need to draw your eye. You see it said it's in red. It's saying, hey, there's some money that needs to be collected. Now the water bill, we're gonna generally always have that. We're generally gonna always have a water bill unless the property's on a master meter that's paid by the association, right? The water bill, we don't get too concerned about it. We put the amount on the settlement statement, and then there's generally going to be a holdback, because even if the seller paid the water bill yesterday or the 2 days before, water is always accruing, right? And so until they turn that water off, or at least get the account in the name of the buyer, there's a bill that's accruing. So that water bill is added to the settlement statement, as well as generally a holdback. Okay. Now the next page of this, I want you guys to see, this is saying that there is a code violation. They don't have an amount yet, but it's a code violation. Now with this code violation being identified on the lien search, but not on the title commitment, this is what you would call an unrecorded code violation. And so in the contracts class and in the title clearing class that I teach you guys about, I tell you that when you add that language, seller will be responsible for closing out all open permits, unrecorded code violations prior to closing. This is what you're looking at, right? Yes. We got a question. Is it Camise?
Hi, can you hear me?
I can.
Hi, good afternoon. I just had a quick question about the code violations. So I'm originally from New York City, and we have an internet system called New York City Department of Buildings. Can you give me information on where we can search permits and code violations here in South Florida in Broward
They're
County?
all specific to each county or city. So
In
there's not
Broward
one
County?
single, there's not one single site.
Okay, I'm in Broward County.
So you would have to go to their code site. So I don't have the exact domain, but you would go on there and you would sometimes you can't even see in every municipality. It depends on how advanced each municipality is. You may not be able to see unrecorded code violations. So sometimes you can call them, and the clerk will, or when I say clerk, the customer service rep will look at the property with you. But if you just go on the government website and you put in code or building department, it should send you to the link to look up.
Planning and zoning.
Planning and zoning is another one.
Department
Mhm.
is
Got it,
what
okay.
you would do in Palm Beach County. I don't know about Broward.
Exactly. That's what I'm saying, it's county specific.
Right.
The link that you'll see, but generally that's what you're asking for. If you call their main number and say, I'm trying to just do a quick search on the property, see if there's any open permits or code violations, they'll take you directly to the site.
Okay, thank you.
No problem. That's a good question. And some even have like paid services that you can go in on your own, or some have where you can look, it's free. So it varies. Can't give you just one answer, unfortunately, but it is public information. All
Hey,
right.
I got a question, Nicole, real quick, if you don't mind.
Mhm.
Should that language be put in every contract in the additional terms, every listing, that language you said as far as?
If you represent the buyer,
Right, okay.
Yep, if you represent the buyer, because remember, it's pursuant to the contract, the seller does not have that requirement. The seller is only responsible for cooperating with the buyer's efforts to close out open permits, right? And unrecorded code violations, all right? The next search is the association estoppel. So we've done the title search, we've done a lien search. Now here's the association estoppel. The association estoppel will provide us with a ledger of the account with the association, payments that are due, requirements for association approval, and any existing violations on the property as it relates to the association standards, right? The cost of the estoppel is also set by the association, and this is also considered a pass-through. If the property is located within a community that has multiple associations, then we will need to order multiple estoppels. You guys have probably heard about master associations, sub-associations. And so we would have to order an estoppel from each of those associations and make sure that we comply with their requirements, right? This
Oh,
is an-
question on that. I'm sorry.
yeah, go ahead.
I thought I recalled several years ago that the state passed a regulation regarding the maximum fees that an association could charge.
Right, so there is a maximum fee that the association can charge. I mean, I don't have it committed to memory. But and then there's also a different fee max if the account is delinquent. And then also if the transaction cancels within the 30-day period of the association estoppel being delivered, then the cost is refunded. Yeah. So this is an example of an association estoppel. This is showing that the property's maintenance amount is $1,875 quarterly. It shows that it's due on July 1st, what the late fee is, when the late fees applied. It also shows that the seller has a $3,450 credit. Nice. So they're well paid up. And that's an amount that we would have to add to the settlement statement, either crediting the seller for that, or under the highlighted, if there's instructions for us to notify that if it's not supposed to be credited to the buyer, that the association needs to be notified to release it to the seller. All right.
Hey, Raquel,
Hey.
quick question. Would that be in the estoppel would show any special assessment dues?
Absolutely. There you go. This page.
Oh, there you go. Sorry about that.
No, you're fine.
I was ahead.
You're on track. So special assessment, as Alejandro just asked, is now on the second page. And then in addition to the other fees, so capital contributions, equity memberships, resale, transfer fees, I circled that because that's a line item that's on your contract, as well as special assessments. I think that's why Alejandro probably brought that up, because special assessments and transfer fees are mentioned in your purchase and sale contract. Now, the special assessments that are mentioned in your purchase and sale contract, those are related to public body special assessments. So in that section of the contract where you select who's going to be responsible for special assessments in the purchase and sale contract, that's public body special assessments. Association special assessments are reflected in your rider. That's where you identify who's responsible for association special assessments, okay? I'm gonna reiterate that. When you check off in the purchase and sale contract, who's responsible for special assessments? Let me grab my purchase and sale contract. When you check off who's responsible for special assessments on your purchase and sale contract, that's not association special assessments. That is public body special assessments. You need to utilize your rider to identify who's responsible for special assessments. So that's paragraph 9F for special assessments in your contract, page 4. That special assessment is not this same special assessment. This special assessment is in your rider, your condo or HOA rider. Okay? And then transfer fees, that's just, go ahead, Alejandro, you have a follow-up question?
Not just on right, just on the same note. So if we are closing, right? And for whatever reason, whenever the rider was written and the seller, the seller didn't disclose that there was a special assessment in the rider, let's say that is a condominium rider, he didn't disclose any special assessment. And then when
Mhm.
you guys have this document, there is actually a special assessment. How do we fix that discrepancy there?
So in the rider itself, there is language specifically that identifies or gives instruction regarding who's going to be responsible for a special assessment that is not disclosed at contract. And generally, if the seller does not disclose it, they're responsible. All right, and that language is there. So it's in paragraph C of the condo rider and paragraph 2 of the HOA rider.
Okay, so if it is disclosed, seller, we're gonna be responsible for that.
Correct.
Thank you.
Correct. Good question. Transfer fees, that's just the cost to what this association is charging for the cost to transfer the account with the association from the seller, current owner, to the new buyer. They charge for that, okay? And then lastly, here's an example of violations that are noted on an association estoppel. I joke, but it's true. Generally, when a property sells, that is the association's opportunity to clean the property up. And so they just go through their whole checklist of everything they ever wanted the owner to do with that property, but they just couldn't get them to do it. They make sure before they close that they get it done. So this association was calling for the roof to be cleaned, a hedge to be removed, the mailbox to be replaced, the driveway to have the weeds removed, and then I guess there was some other trash. So they just really cleaned this house up at closing. Now, I joke about it, but I want to be clear that a property that's located within an association and has an estoppel, that's going to be a title requirement. And so we have to, the same way that you saw on B1 where it said pay off the mortgage, pay off the Y green, make sure the notice of commencement is removed. It says, make sure you comply with the restrictions of the association. It'll name the association. So the point is, we wouldn't be able to close if the seller does not clean this roof because it's on the estoppel. Okay, and everything else is there. Replace the mailbox, so on and so forth, right? And then we have to check back with the association and say, okay, has all 5 of these violations been cured? And they'll have to say yes or no. Okay. The next examination of the property is a land survey. The survey is conducted to confirm the boundary lines of the property. It sits within its boundary lines and confirm that none of the property structures are over its boundary lines, so that the pool is within its boundary lines, fences, so on and so forth. The average cost of a survey is about $350. It can increase with larger lot sizes. Larger lot sizes will be, $700, $1,200. 1,700 I've seen. Okay. A survey is generally always required in a finance transaction. In a cash transaction, it is the buyer's prerogative to decide whether or not they want the survey. But if they do not obtain a survey, they will not have a survey endorsement on their owner policy that is issued at closing. Again, we're issuing insurance, and part of the insurance coverage is to say your property does not have any boundary issues. If we don't have a survey, we can't say that there's no boundary issues. And so if we can't say that there's no boundary issues, then we can't give you insurance on that point. Okay. All right. So those are the searches: title commitment, lien search, estoppel, survey, right? Now, what about escrow holdbacks? Because that's
Excuse me, Raquel.
Yep.
Just before you move on, if it's a condo, you wouldn't need to do a survey, would you?
Correct.
Okay.
No survey. Terry. Terry, got a question? If you're talking, you're on mute.
Raquel, question with the survey. You mean that?
Sorry.
Hold on one second. Hold on
Oh,
one
I'm
second.
sorry, Avery. Go ahead.
Hold on, Alejandro, 1 second. Terry
Yes.
got her mute button.
Sorry about that. So if the seller had a survey and it's 3 years old,
Can we use it?
Buyer, or does the buyer have to get a new survey?
So that's a good question. So we can consider that's called a prior survey. The seller would have to sign an affidavit affirming, they can affirm that no changes have been made to the property, but we also would have to get the survey, what we call recertified, meaning that we generally would try and get in contact with the prior surveyor for them to go out. They would have to go out and say that that there have been no changes to the survey. And if we can't locate that surveyor, and it can be a kind of a little bit of a, what do you call it, rigmarole or runaround.
So
And
it's
cost
better just to
saving-
invest the 350 and
Yeah, exactly. The cost savings are not always worth it.
sure, because they're gonna charge to recertify.
Yeah. Oh, absolutely.
know,
Oh, yeah.
You know,
Oh, yeah,
and
they're
I mean,
fine.
and that's fair. That's fair. They should.
Correct. So
So
for that
okay.
reason, it's not always, most times it just doesn't make sense. Because it's
Gotcha.
harder to order, then they have to go out, and they kind of generally don't even want that work. They want a full fee, so
Sure, of course.
yeah.
Of course.
Good question.
Thank you.
No problem. Alejandro, your question?
So you said that if it is finance, lender is going to
Require.
require the survey
Mm-hmm.
paid by the buyer.
Correct. And the reason they do that is because at closing, if it's a finance transaction, we issue two policies. And the owner's policy and the lender's policy. And those two
Mhm.
policies are identical except for coverage amount, right? So the exceptions are going to be the same, the coverages are going to be the same, except for the amount. The lender is insured up to their loan amount. The buyer is insured all the way up to their purchase price. So
Okay.
if the buyer does not purchase a survey, then no one's getting coverage, and the lender wants coverage. So that's another concept to keep in mind with finance transactions. Tell your buyers to look at that transaction as a partnership, right? You guys, the buyer is going into, the lender and the buyer are purchasing that property together. So even though the buyer might say, who cares about the pool being 5 feet over into the neighbor's yard? Neighbors are never there. They're snowbirds. They don't care. The lender will likely say, yes, we do care. We can't purchase this property with a 5-foot encroachment into the buyer's, into the other owner's property.
But that payment is done at closing, or that is actually, like the appraisal. I am aware about the appraisal. He's gonna pay, let's say, the 300, 400 for the appraisal. At
It's
one
at
point when he
closing,
applied,
correct. That's
but the
paid at
survey is
closing.
gonna be at the end, or it's
Paid at
gonna be in
closing.
that process?
Yes, it is
Okay.
paid at closing, correct. That is not an upfront cost.
Okay.
Really, there are no upfront costs on our side. The upfront costs for the buyer at closing are really on the lender side. That's like their title search, that's their appraisal. With you guys, it's their homeowner's inspection. Generally, there's no upfront costs with closing. Now we do collect a credit card so that, remember, I showed you guys those are pass-through costs. In the event that the transaction cancels and for whatever reason, you can't get what we call a wash, where the vendor just basically doesn't require that the amount be paid, then somebody has to pay it. And so it's going to be the responsibility of whomever was responsible for that cost. All right. All right. Escrow holdback. An escrow holdback can sometimes be utilized to address pending matters that can be resolved post-closing. Escrow holdback. That means that we're holding back a sum of money from the seller in the escrow account. If an escrow holdback is agreed to, you want to be sure that the terms are clear on how and when the funds will be released. Additionally, you will want to find out from the closing agent whether or not there's a fee for that escrow holdback. Because keep in mind, if you do an escrow holdback, and then now the closing agent has to, when it's time to release those monies, now the closing agent has to go back and perform all the tasks that are necessary to disperse those funds. So many closing agents charge a fee for that escrow holdback service. All right. Now, let's get into calculating closing costs and proration specifically. So before we do that, we need to understand the definition of proration. To prorate is to allocate proportionately. To allocate proportionately. So who is responsible for what portion of this whole fee, of this one fee, who's responsible for it. Another concept to understand that generally the day of closing in a proration scenario, the buyer is responsible for the day of closing, right? So if we are closing on if there's 30 days in the month, we're closing on the 15th, the seller is going to be responsible for days 1 through 14. Buyer is going to be responsible for days 15 through 30. That's what we call a proration. You take one amount and you allocate to each person proportionate to their responsibility for that fee. Not every fee in closing is going to be prorated, but those that are, now you understand that concept and how we come up with the proration. It's based on the day of closing. Now, one of the main fees that are prorated is property taxes. Now, property taxes in Florida are generally two categories. You see two categories of property taxes. You see ad valorem taxes, which are based on the value of the property. That's where the property is taxed based on its value. And then the second amount is what we call non-ad valorem taxes, and that's based on the services to the property, right? The services to the property are taxed. So to go into further with regards to ad valorem taxes, these taxes are charged what we call in arrears. In arrears. That means that the payment is due after the fee has been incurred, right? In arrears. So you're paying for it after you've already incurred the cost. Ad valorem taxes, their fiscal period is January 1 through December 31st. Before everybody gets afraid, just listen. Again, every time I go over this section, I tell you guys, just have a framework, have an understanding. If you join the community, the recording will be in the community, and it's also going to be on our YouTube page, right? So just have a framework for this. The fiscal period for tax proration for the ad valorem taxes is January 1st through December 31st of the current year, okay? The tax bill will be issued in November, and the amount is due by March 31st. So all of those days, January, all the way, that the seller is incurring this cost, they don't have to pay it until the bill comes out, and then they'll pay it in March. So March is the last day, and there will be charged late fees, right? With regards to prorating ad valorem taxes, the seller is charged for the days that they occupy the property, and the buyer is going to be credited for that time period. Why? Because someone's going to have to pay this tax at the end of the year. The seller needs to pay the days that they were in the property, and the buyer is going to be the one that's responsible for paying it, right? So there's going to be a collection from the seller to be credited to the buyer, because the buyer is going to be responsible for paying it at the end of the year, all right? Now, ad valorem taxes are almost the quite opposite. Non-ad valorem taxes are non-value taxes. They're not based on the value of the property. They're based on services to the property. So what are services to the property? Maybe lighting. Maybe there's a special tax for a fire station or roading that's being done in that area. There's a special tax in Miami-Dade County in its community, and they call it a special taxing district, right? That's a non-ad valorem tax. You're going to see it on the tax bill. And the fiscal period for the non-ad valorem, don't ask me why they do it this way, but they do it. It's October 1 of the current, these are paid in advance. So the seller would have already paid for the year going forward, right? And the fiscal year is October 1 of the current year through September 31st of the following year. So for example, when we close, they're going to be paying for October 1 of this year through September 31st of 2024. Depends on where you are in that October to September time period. Okay. So in this particular case, we're now September 21. When we close, the seller would have paid from October 1 of 2022 all the way to September 31st of this year. So they're going to get a credit for that, and the buyer is going to be charged for the 21st through the 30th, through the 31st, because the seller already paid for this when they paid last year's tax bill. Okay. And then the seller is credited for the days that they will not occupy the property. So in our hypothetical, the seller is going to be, if we close today, the seller will be credited for September 21st through September 31st, because they've already paid for that non-ad valorem tax when they paid last year's tax bill. Okay, so they're like the opposite. Ad valorem taxes paid in arrears, seller hasn't paid them yet. They're paid at the end of the year. They're going to be charged for the days that they own the property during this fiscal year. The buyer is going to receive a credit from the seller for that, and then the bill is paid at the end of the year. The non-ad valorem taxes, seller paid those taxes last year. They're going to be credited for the days that they're not going to be in the property that they've already paid for. The seller is going to be, the buyer is going to be charged for the days that they're going to be in the property that the seller has already paid for.
Recall, quick question. In
Yep.
the valorem taxes, if that goes from January to November, right? In November is December, I'm
December
sorry, and
31st.
in November is when we're gonna know how much is that taxes of that year. And we are closing today, the 21st. How do we know how much
Good
these taxes
question.
from January to now, if it's gonna be November, when we're gonna know?
Very good question, Alejandro. We used last year's tax bill, and it's an estimate. So I want to make sure everyone heard your question, because that's a phenomenal question. So Alejandro's question was, if the tax bill does not come out, it's actually issued around October, but it becomes due in November. He's saying, if we don't know what the taxes are going to be this year because the tax bill has not come out yet, what amount are you using? We use last year's tax bill.
The portion of the valorem.
We use the entire bill. We use the entire bill. We use last year's non-ad valorem and ad valorem tax amount. And what we do is at closing, both parties sign what we call, they sign a closing affidavit, and there's an affirmation specific to property taxes that tells both the buyer and the seller that we've used last year's tax bill to estimate what the taxes will be at the end of this year. In the event that there is a huge disparity between what the taxes, the amount that we were able to use to estimate taxes, and in the event that there's a huge difference between the estimate and the actual taxes, the buyer and the seller will agree to make themselves available to shore that up. Now, you generally don't have that issue, especially when you're going from owner-occupant to owner-occupant. Where you usually see taxes go through the roof is when the seller is an investor. The seller, when they came into the property, if they're an investor, when they came into the property, remember, they're paying in arrears, and they enjoy likely the homestead exemption of their seller. So they paid a lower tax amount because it was based on last year's taxes, right? And that would have utilized the homestead exemption. When our buyer comes in and the taxes are, the ad valorem taxes are assessed in October against a non-homestead owner all that year, all those days that non-homesteaded owner is going to be of the buyer, because again, it's the bill. And what we end up doing is when we have situations where that is anticipated, we will overestimate the taxes. We'll add a cushion. When we get to that time of year, we add a cushion, and then once the tax bill comes out, we'll pay the actual tax bill, and then any excess is issued to the parties. But short answer is we use last year's tax bill. Very good question. What you guys see on the screen here is what that proration and allocation looks like on the settlement statement. So where you see county taxes, that's your value taxes, that's your ad valorem taxes. And you see the dates, January 1 through, we closed on March 2nd. So the seller was debited, charged $505.08, and the buyer was credited $505.08, because the buyer is going to have to pay for January 1 through March 2nd, really March 1st, right? When at the end of the year, when they pay the tax bill. And then the next line, you see the non-ad valorem taxes, right? And you have the seller being credited for the non-ad valorem taxes because they've already paid them, and the buyer being charged. Now, understand that there's no monies necessarily, no hard cash being collected. It's just balancing out debits and credits to when you get to your final cash to close amount, okay? So that's what tax proration looks like. The last major section for you guys is these contractual closing costs that are found in paragraph 9. Now, these you guys should definitely understand. They're in your contract. You should understand them. Let's run through them really quickly. Paragraph 9, doc stamps. What are doc stamps? Doc stamps are the taxes on the deed. Owner's policy and charges. Remember I mentioned if it's a finance transaction, well, this is the owner's policy. You see where it says if paragraph 9C1 is checked, don't pay too much attention to that for the purposes of right now. We're just going to go through the line items so I can explain to you guys what they represent. And then we'll have a quick table that shows you who's responsible for each line item that has that if 9C1, if 9C2, if 9C3 is checked beside it, okay? So the owner's policy is the title policy that covers the owner, the purchase. The title search charges, we talked about that earlier. That was the cost to order the title search, which will provide us with our title commitment. The municipal lien search, we looked at that earlier, right? That's where we saw the water bill. Jumping over to the next category, we see HOA and condominium association estoppel fees. That's generally a seller's expense. We are the 9A. We're going over what are seller's expenses. Condo association and HOA estoppel fees. We looked at an estoppel earlier. That's what they're charging for. That's what is being described there. Recording and other fees needed to cure title. Remember we talked about that notice of commencement needing a notice of termination, owner's affidavit, and contractor affidavit recorded to address that requirement. That's what that's speaking to. There's a cost to record that. The seller is responsible for the cost to record that. Seller's attorney's fees. If the seller has an attorney that's charging fees, seller's responsible for that. And then other, I know oftentimes you got to put your transaction fee there or whatever costs have been agreed to be paid by the seller. Dropping down to 9B, the first bullet point is taxes and recording fees on the note and mortgage. Now in Florida, we don't record notes mostly. That's the proof of the debt. We do record the mortgage. And so that's going to be taxes on the mortgage. It's going to be taxes based on the mortgage amount, right? Just as the deed taxes is taxes based on the deed amount. Say we have a $4 million sale. It's going to be taxes on $4 million when we record that deed. And let's say the borrower only took out a $2 million loan. It's going to be taxes on the $2 million mortgage. Now, the next bullet point says recording fees for deed and financing statement. When we record a document, we're paying 3 charges. We're paying for the taxes on that document, if any, and then we pay for the pages. So that next bullet point that says recording fees for deed and financing statements, that's saying the buyer's responsible for paying for the pages. And then the third fee, which is not reflected here, is the cost to use the electronic recording platform. So most of your closing agents, you might see, what do you call it? Simplifile. They're the most commonly used one. When you see Simplifile, that's the platform that they're using to electronically record the title documents. Dropping down to the next bullet point is the survey. We went over that. That's a buyer's expense. Lender's title policy. Remember, we said that there's going to be 2 policies issued. If it's a finance transaction, the buyer's responsible for paying for the lender's policy. HOA and condominium association application and transfer fees. Remember, I highlighted a transfer fee on that estoppel. That's what that's speaking to. The cost that the association is charging to transfer the account from the current owner to the new buyer. Municipal lien search, we hit that. Loan expenses, that's just the cost that the lender is charging for the loan, and we'll take a look at that. Appraisal fees, that's self-explanatory, right? Buyer's inspection costs, that's their homeowners, their property inspection. The buyer's attorney's fees, all property-related insurance. Homeowners insurance is an example of that. And then the owner's policy premium, if that was a term that was agreed to in the contract, okay? Now, that's an explanation of what those line items represent. Someone's gonna say, now, how do we know who pays for what? Here on the screen, you have a graphic, and I'm gonna drop a handout for a link to a handout for you guys in the chat before we end. This is a graphic that shows you who customarily selects the closing agent in Florida and pays for these amounts that you see with the 9C1, 9C2, 9C3 beside it. The party that's responsible for that is based upon which paragraph you select in paragraph 9, which I'm going to show you shortly. So here, what you see on the screen, the counties that are in what we call the title experts gold, those are the counties where generally the buyer selects the closing agent and pays for. There are 3 charges that move around: the cost for the title search, the lien search, and the owner's policy. The title search, lien search, and the owner's policy. Those 3 charges move around, and the party that's going to be responsible for paying for those are based upon which of these paragraphs you select: 9C1, 9C2, or 9C3. This is from paragraph 9 of your purchase and sale contract. So when you guys are negotiating and you're making an offer, you're going to have to make a selection in this section: 9C1, 9C2, or 9C3. Now, what I just showed you is the counties that are in Title Experts Gold are the counties where you generally see 9C2, except for Broward and Miami-Dade County down here. Those are actually what we call the Miami-Dade Broward provision, where we have a split the baby, and I'll show you what that looks like. The counties that are in the white, those are generally 9C1 counties, where the seller is selecting the closing agent, paying for the title policy, owner's policy, and lien search. Okay? Now, here's what that looks like on a table. This is 9C1. This is all of those closing costs that we saw here in paragraph 9. All of these closing costs. If you select 9C1, this is where they fall as it relates to each party. And I'm gonna give you guys a handout. You can do a screenshot now, and then you'll have a handout shortly. If you select 9C1, this is where they fall. If you select 9C2, this is where they fall. And then if you select 9C3, this is where they fall. Okay? Show you one more time. 9C1, you see the seller selecting the closing agent, and they're being responsible for those 3 fees that move around. 9C2, you see the buyer selecting the closing agent, and the buyer being responsible for those 3 fees that move around, all on the buyer side. And then 9C3 is what we call split the baby. You have the buyer selecting the closing agent, buyer paying for the owner's policy, and then the seller paying for the title search and lien search. All right. Now, the other fees, settlement fees, I get this question all the time. They're based on the closing agent. They vary based on the closing agent. The closing agents have their settlement fee, the cost for them to provide a service. So far, all the costs that you guys have seen have gone to their particular people, gone to the estoppel people, right? The lien search, the survey, all those fees have gone to everyone else. This particular fee does go to the closing agent, and this is their fee to do the work. The title insurance fee is state promulgated. That means that fee is the same. We use a calculator. The entire state of Florida, we use a calculator. We put in the rates. You should get the same figure regardless of who you go to, unless they have given some type of credit. And then you obviously start adding endorsements. But the base policy cost for the owner's policy and the lender's policy, that's state promulgated. Every closing agent should give you the same figure, because we just drop it into a database, essentially, and it feeds into our closing system, okay? So again, as it relates to the title insurance cost, the only thing that really is going to vary is the closing agent settlement fee, and potentially if they have any other cost of closing your file or closing the file. Okay. So step 3 is balancing the figures with the lender. These are some of the figures that you see from the lender. All right. And you guys should know that 80%, it doesn't look like that here because this is a very condensed shot of the settlement statement. 70% of the figures that you see on the settlement statement, they come from the lender. That's why we can't give you a full settlement statement until we're balanced with the lender. Okay. So those are the different figures. Step 4, we made it. It's time for you guys to review the settlement statement. And you're going to review it based on the framework that you learned today, understanding the different searches, where the costs that are pulled from those searches, and then they're dropped into the settlement statement. Now, you should also be able to have an eye for now seeing, oh, I selected 9C1. Why is the title search and the lien search on the buyer side? 9C1 says that the seller's responsible for that, right? Now you can easily eyeball that, right? Same thing, if you selected Miami-Dade Broward provision, why is the title search and the lien search on the buyer side? The seller is supposed to be responsible for that. Now that little area, paragraph 9, you guys should be able to catch that. Tax proration, you should be able to see, if it's all on one side, you should be able to kind of say, what's wrong with this? But the cost in paragraph 9, I expect you guys to be pretty tight on that now. Right? You have a framework around that. I just wanted to show you guys really quickly. Again, you want to make sure if you represent the buyer and the seller, make sure the seller credit is right? These are all the different things you want to look for. Obviously, make sure your commission is there, please. Make sure it's correct. It's generally not there, but make sure it's correct. What could be missing is a transaction fee. So if you have a transaction fee, make sure you see that there. All right. Now, the last thing I want to show you guys before we get out of here, and we did very good on time, is using a closing cost calculator. Using a closing cost calculator on our website, you have access to a closing cost calculator. Use this closing cost calculator to prepare. You can use this calculator to, and I'm just getting a link to this for you. There you go. 1 second. And this is actually Jessica's work. Oh man, guys, I had your questions. Good thing I didn't miss many of them. I'm gonna answer questions now. I have the chat box covered. Okay, I see some questions here. Charmaine says only has 30 days. It does? There you go. There you go, Charmaine. Can you write the website? What website? That's way back. But on our website is this closing cost calculator. If you go to our website, it's called Expert Estimates. You'll log in. If you click on this link, it's going to give you instructions on how to log into this site and prepare a seller net sheet, is what you guys always ask for. Instead of waiting for us to prepare a seller net sheet, you can easily just go into the site, and this is my contact information. I'm going to jump off here and make sure you guys can see this. Give me 1 sec. Where are we here? Boom, I want to show you guys this really quickly. So this is what the site is going to look like when you get in there. And make sure you guys can see this in the last few minutes. New estimate. Let's say seller net sheet is really just this easy. You're just going to put in the property address. Oh, there you go. 542. Sales price, 500,000. Closing on the 21st. We're going to do seller. And what this is asking you is which paragraph, 9C1, 9C2, or 9C3. All right. So we're going to say we chose 9C1. Remember, if I didn't make this point before, What I showed you guys with that, with the graphic of the state of Florida, that is what's customary. Meaning you can negotiate for the, for example, in Palm Beach County, generally it's the seller that is 9C1, but you can negotiate for the buyer to select the closing agent and pay off and pay for the title search, lien search, and owner's policy. So what I showed you guys is what's customary. You can always negotiate otherwise. So if we are there at an appointment with the seller and we ask the seller, they said that, oh, I have a $100,000 mortgage and a $50,000 HELOC, you put that in there, your commissions, let's say you said, okay, we're gonna do a 6% commission, 3% buy side, 3% sell side. Property taxes, if you want to guys go in there, you can go ahead and put your taxes in. We're not gonna do that for the purposes of today. Here you can put in any knowledge you have about HOA dues. What about if we say, oh, we know that we're doing a credit, for the seller concession of $5,000. Seller credit, closing cost credit. And that's gonna be $5,000. Calculate just that quickly. That was quicker than it would take you to shoot an email to the office and say, hey, can you give me a seller net sheet? All right. And now you have it. And you can do this at the table. And what if the seller says, well, what are we listed at? Well, my neighbor said she sold for $520, Alejandro. What if we do $520? And you say, well, your neighbor was fully renovated. So I said 500, but you probably really will land at 490. So now our sales price is 490. Okay, my number lock is not cooperating. So now we said 490 is actually what we're gonna likely sell at. And now you see how the net number just keeps changing based upon what figures we put in here, all right?
Where do you see where we can see how much actually he's gonna be paying at the end? At the bottom?
What he's gonna get back, this is his net. This is his proceeds, seller net sheet.
Oh, so that number is what it is supposed that he's gonna get after the whole,
After
even
these
though,
expenses,
I see
yes.
what you mean.
Yes,
Okay.
yes, after these expenses.
And then we use the email to share it. So we just write the email address for the guy and then we send it to him.
Yep, what's your email address, Alejandro?
ACR TRUE True Realtor, ACR True Realtor at Gmail. At gmail.com.
ACR True Realtor?
True Realtor at Gmail.
And it's gone. And then you can download it as well.
If we use your company, right? It does any apps that you guys provide in case that we want to put any like escrow deposit without have to go physically to the office or send a wire transfer?
So we don't use, you're talking about like
Sucum or any of those apps that you choose the company and you take a picture of the whatever,
right,
and then
we're finalizing, oh gosh, what is it called? Zacum.
Sucum. Yeah, that's what
Zacum.
I see. Sucum.
Mhm.
Sucum. Yeah,
Yeah,
like see. So you
Zacum.
use Sucum, and
Yeah, we're finalizing, go ahead.
do you guys take a escrow deposit for rentals as well?
No.
Wow, you're showing the face.
No.
Okay.
No.
All right.